Hello. So today we talk about managerial accounting. Talk about managerial accounting. There's no way we don't talk about financial accounting. Both managerial and financial accounting, they are the introductory level accounting courses for all the B school students. Meaning that if you are in B school, there's no way you run away from those two courses. So what is managerial accounting and what is managerial accounting for? We can compare this to financial accounting. If you're really sitting in your financial accounting class, listening to your professor, well, I think you probably remember for financial accounting, we have, in addition to the boring journal entries, we have those rules which we call GAP, generally accepted financial principles, which all the accounting stuff, they have to be based on the principles or be guided by the principles. And also we have four sets of financial statements, right? One is income statement, but the other balance sheet, three is statement return earnings, and you have cash flow statements, right? So all these. But for managerial accounting, it's kind of a little bit different. First, managerial accounting, well, let's not go there yet, right? So what is financial accounting again, right? To talk about financial accounting, to talk about a gap, we have to know what is financial accounting for, right? So if we think about it today, what are big name companies we heard, right? We know Microsoft, we know Amazon, we know Dell, we know Shell, we know those companies. And those companies, their stocks are being freely exchanged, not freely, sorry about that, are being exchanged in like a New York Exchange or Nasdaq, those places, right? So meaning that many people, they have stake in those companies. Those companies are publicly traded companies, publicly listed companies, right? So whenever you are interested in those companies, whenever you are holding stock of those companies, no matter it's 1 share, 2 share, or 1 million shares, you become a shareholder or you become an involved party. And there are millions of people or billions of people could potentially be shareholders, be involved, having stake in those companies, right? So those companies are required, due to these reasons, those companies are required to disclose their financial statements. The four sets, many we talk about. Sometimes on a quarterly basis, every year must be that case, right? Sometimes quarterly they do that too, and semi-annually they do that too. Anyway, they have to report to the public, right? So those companies have to report to the public, and the law states they have to be responsible for what they have disclosed, right? Otherwise, if their information were found to have misled people to make wrong decisions about lending, borrowing, or whatever stuff, then those companies might be held responsible and face consequences. Okay, so basically what we are saying is those companies disclose financial information and they have to be reporting to millions, tens of millions of people, hundreds of millions of people, and they might be held responsible for what they said if it's not true, right? So if you are in that situation, what you're gonna do, right? I think for me, I would rather think of this way. I would not give anything about the future, but focus on what has happened, right? Why? Because when you talk about the future, it's always subjective, right? And when it's subjective, different audience might have different understanding, so you are at the risk of being charged with misleading people. Okay, so on the other hand, historical information, especially those happened and you knew you were part of it, you feel much more comfortable to disclose those, talk about these to other people. That's one thing. Okay, so financial accounting is talks about historical information, not future information. Okay, income statement talk about what happened during the past period, might be 3 months, might be half year, maybe a whole year, maybe 2 years, right? Those operation setting expenses. And the balance sheet talks about it at a certain point of time, the asset composition, liabilities, financial leverage stuff of the company, how much asset they have by the certain year end, how much they owe other people by the year end, how much shareholders stake in the company by the year end or by a certain period. Also all about historical information. And the other is, in that situation, I would want to define clearly before I give information to other people. I would want to define clearly that what I'm talking about. Okay, what I'm talking about. I want to make sure people know what I'm talking about. When I say sales, people know what a sales mean, right? When I say for the past year we have those accruals, I want to know what people know what those are. Okay, why? Because of those people who has stake in the companies, right? Those people have different purposes of using financial information, right? If we talk about the capital equity investors, shareholders, right? How do they profit? When the company stock goes up, they make much more money. When the company stock price goes down, they lose money, right? So for them, they want potential good news about the company in the future, and the potential bad news is about the company in the future as well. Because the better it is, they make more money. The worse it is, they lose money, right? However, if you think about a bank, when bank lend money to a company, right? How do they make money? They charge interest, right? So if a company really does better in the future, do banks make more money? No, probably not. They will still charge their flat interest, right? However, if companies do bad, really goes to the bottom of the valley, the banks might not only not be able to recover their interest income, but they might lose their principal, the money they lend to other people as well. So from this perspective, we know different parties have different uses of financial statement information. And as a company wants to disclose information, right, they cannot give information, particularly tailor-made information for everybody with different needs. It's impossible, right? So they can only give one set of information. So they will hopefully they want some universal rules, tell people, here's the information, here's the rules, and based on those rules, those companies make those announcements. So if you want to know what the information is about, you have to understand rules first, right? So financial accounting, because it's for public financial accounting information, so they have very clear rules, which is GAAP, and companies disclose enough information. So users, based on their knowledge of GAAP and other stuff, they have to make their own decision about utilizing. But the companies are only responsible for providing accurate, truthful information. Okay. So these are the and financial accounting. The last thing we know already with the financial accounting, they are giving to external people, right? External, right? You become a shareholder, like I said today. If you buy 100 shares of Google, okay, does that mean you can walk to Google headquarters saying that, hey, you know, I'm part of the bosses, right? I just walk into your company, and because I'm part of the bosses, you gotta give me a small spot, a small office, so I can fit in and let me enjoy your famous nice lunch, right? If you do that, I'm sure that you're probably gonna spend next night enjoying the California taxpayers, you know, nice, you know, government facilities, okay? So this is financial accounting information. But what about, so accounting systems, they're used to generate the information, right? So the information, if it's just used for financial purpose, is what a shame it is, what a waste it is, right? So in addition to financial information, of course, companies from internal perspective, they use accounting information as well, right? But we can understand, right? If you just report to your family, if you just report to your neighbor, to your good friends, you know, how do you behave when you're in front of your good friends compared to when you are on a podium, right? You know what I talk about, right? Today I'm at home, I'm wearing my shirts, and which I'm happy about, because when I was at school, I have to wear some sort of more official shirts. Okay, this is a T, sorry. So two things, right? One, managerial accounting is for internal. It's for internal users. They want to know different things that they probably do not disclose to the public, right? So they want to know these. I think that's the first thing we need to know. Second, managerial accounting, right? Because it's for internal users, so it is much more flexible. There's no mandatory rules imposed on how to do managerial accounting. Basically, the guideline is, as long as your boss needs, right? As long as your boss needs, you provide to it. Don't blame me for this, right? It's not in the book, right? So for example, your boss, he might be a Marvel fan, right? I'm never a big fan of Iron Man stuff, but I'd say he's a big Marvel fan, right? So your boss says, okay, internally, when you give documents to me, please don't use revenue anymore because I hate the boring word so much, giving me pressure, right? Instead, let's call revenue Tony Stark, okay? So next time, so of course, do this next time. Next, when you do the monthly report, you said, hey, boss, last quarter, we had like 250,000 Tony Starks. Are you happy about that, right? That's okay. It's for internal and it's for managerial, right? So this is fine. Just an example. Managerial accounting, there's no imposed rule. As long as you remember when you tell other people, when you report to the tax officers, when you report to the SEC, you remember, do not call revenue Tony Stark. Just call them, you know, ready. That should be fine. Okay. And there's also, because there's also no imposed rule, so we can use it to do anything that you want, right? You do anything. For example, your boss may say that, okay, I want to take a look at, for example, our inventory balance, a particular kind of inventory, right? I want to take a look at the warehouse. I'm not sure about other stuff. I just want to make sure to see how many toilet papers we still have, right? To make sure I have enough to use. So they can demand all things, okay? And what else about managerial accounting? So managerial accounting is we said it's for internal use, right? There's no mandatory rules. So for these reasons, so I mean, if you run the company already, if you are insiders already, do you really care about those information you report to other people? Yes, you care about it because it might get you into issues, but you don't care about it because you knew these already. Those are historical information and you knew these already. So if we think about managerial accounting, there's not too much of a point to still focus on historical information and just reorganize them, present them in different kind of combination, right? So why people need to managerial accounting information? We will talk more about this, but managerial accounting information is more future oriented than past oriented, right? So for example, companies, managers, right, CEOs, they look at what happens, right? And they hopefully managerial accounting can provide them with some insights to see what's going to happen, right? How many we can sell, right? And based on how many we can sell, how many we should make, right? So based on how many we should make, for example, we have to decide how much inventory, how much material to purchase, and by the end of each period, how much material we have to save, how much finished goods we have to keep in the warehouse to be ready for the next period sales, right? So all those information. And they also want to know, for example, during the process, how much labor were used, how much material were used, and how much overhead, how much electricity were used, and how much will be used in the future. Okay, and they want to know if there's anything goes wrong, who should be responsible. If something goes well, who should be rewarded or not rewarded at all, right? So those things. So managerial accounting have a different perspective as they are compared to accounting, financial accounting. They are more future oriented. Another thing we talk about, right? So given those accounting stuff, managerial accounting we knew, I think we can get a little bit idea of what a managerial accountants might do. Okay. So, but before we do that, because managerial accounting, for managerial accounting in this class, in this particular context, we'll be more focusing on manufacturing parts, right? So if we talk about the manufacturing part, we have to talk about two concepts in the company. One is the difference between staff positions and the line positions, okay, in the company. What is staff position? What is line position? If we talk about line, basically every company has its purpose, right? For example, Shell, we know is oil and gas. So they might be extracting, they might be selling, they might be making. So they're closely related to the products and to the selling, making, you know, the upstream, midstream, downstream of the company, right? If we talk about a computer company, right, they have making, they have purchase, they have assembly, they have sales, they have marketing. So those are more like what we talk about is called the line position. Line positions, they are more directly related to the main purposes, objectives of the company, right? On the other hand, we also have those who are part of the company, but not as closely related to the main objectives of the company. Okay, for example, like HR. Unless it's a really HR company, so HR usually they are called we call doing supportive stuff or administrative stuff, right? Or for example, if it's not an accounting company, it's not an accounting firm, then for Shell, for Amazon, for Facebook, they must have accountants, right? Accountants, they are doing important stuff, of course, but if you think about it, what they are doing are not directly so closely related to the main objective of the company. For example, Facebook, right? Their objective is not to do accounting job well, right? So those positions we call them staff positions. Okay, staff positions. So to end this class, I will use more example. I will use one more example to show you what a managerial accounting does. Okay, so here I have a figure that I like a lot. I have different colorways, but really this was one I liked at the beginning, but gradually there are some other colorways I can show you later, which I collect more later. Okay, I collect these stuff. So for example, right? For example, let's say I have a company, I hope, have a company making these stuff. With the beauty about these stuff is it's not only for man caves, right? Your wife, your girlfriend, your significant other half might like it and use it as a decoration piece too. I really want it that way, but my wife never thinks that they can be used as decoration pieces. But that's not the point, okay? So I have a company making these stuff. Right? So for example, last year was good year, right? So I would have financial statements. I would have to tell my investors, right, how much income we had by selling these birds, right? And to make these birds that I sold, how much it costs, right? And how much money I paid for other utility, whatever stuff, and how much money I paid to supporting positions like accountants, HR, which is going to be in my SG&A, selling general and administrative expenses, right? Then maybe I hire some R&D, research and development people to study whether they can make better birds, better looking, more attractive, more dope, I guess, right? So those things, right? And by the end of the year, I know how much birds didn't get a sale in my warehouse, and how much asset do I have, how much raw material I still have, how much money I haven't collected, which is accounts receivable, and how much money I owe other people or my suppliers, right? So those information about these are going to be provided in the under financial accounting, right? However, for me, right, it's easy. I know I kind of have a sense. I don't need to look at my financial statements to know that I'm doing well or whatever, right? But for me, what's important is next year, right? It's next year. Next year, what I can do is my future, my plan, and what I can make everything better or not, right? So I'm thinking about showing some other pieces. Okay. So next year, I have my R&D people presented me with some other stuff, okay? Like this figure. Okay, like this figure. It's I don't know if you noticed from macros, right? The scout, squadron, whatever stuff. I like those. Okay. Anyway, so we are making a little bit more complicated figure, right? So to me, I want to know whether it's gonna go well or not before it really happens, before I really commit too much. So here's what managerial accounting classes stuff will take into place. Okay. So first, I need to know at what price I can sell, and at that price, how many I can sell. Right? You remember, the higher you the higher the price tag you put on your commodity, the fewer units you will sell. The fewer you will sell. Okay, that's the important thing, right? So I'm kind of struggling. I want to know what a price, and to put it there, I want to know at the price how many I can sell. But for me to get an idea, not only I need to know the price, I need to know how much it takes to make these, right? And how much it takes to make these, right? There are, for example, to make these, each one, I guess, will consume certain amounts of plastic, vinyls, whatever stuff. And for each unit, there will be different paints and different rubbers amounts. So those, and for each unit, because somebody has to assemble them, put them together, right? So labor will be involved. So if we assume everything is used efficiently, effectively, right? For each unit of product like this, I kind of know how much material, how many material have to be consumed, and how many labor hours per person have to be consumed, right? And of course, over the process, think about it, right? There are other things, right? For example, electricity of the workshop. No matter I make more or fewer, I have to turn the electricity on, right? I may have to turn the AC on, and I have the assembly line maybe, so I have to run it. No matter how many units I run it, I have to turn the power on, right? And I may need water, whatever, certain places. So those are fixed costs. And I have rents, right? No matter I make more or make fewer, the rent, as long as you rent a place, the rent is gonna be the same. So I have all these costs to think about, right? And these, I wanna make sure at the best price point that I can make my decision is a point that allow me to make most money. And what do I mean by most money, right? At that price, how many I can sell? At that price, how many it costs me to make one, right? So the difference between the price and the cost per unit is going to be my profit margin, a gross profit margin. Then from that, multiplied by the units I sell, I can figure out, right? That's my profit. Can we see that, right? So managerial accounting give you an idea of, for example, how much each is going to cost, right? How much are variable costs? What's a portion of fixed costs? So you can get an idea of the best pricing decision for a company. That's one use of managerial accounting. Okay. And also, when we are really running a business, not everything goes because you and your employees, your perspective is different, right? Everything is out of your pocket, but for employees, they are making money, so earning it, right? So it's kind of different, right? You when you make plans, you want everything to be efficient, effective, but when it really applies, things usually goes worse than you expected. All right. So for example, to make these, right? If I say that, okay, you know what, for every unit, I expect we'll have roughly 1 pound of rubber, 1 pound of plastic, and 2 pounds to 1 pound of plastic, and then maybe 3 ounces of rubber, right? So I checked. That's my plan. If things are going efficient, right? I'm not picky. If things are going a more normal level efficient, it should be like this, okay? But then I found out, okay, geez, those people are consuming like 1.2 pounds of plastic, right? So managerial accounting can help me with that too, because from what I analyze, I know 1 pound is the normal level. But then if I see people consuming 1.2 per unit, I know somebody is not doing their job, and they can be not punished, but disciplined, given the company policies. So managerial accounting can help us with all these. Okay. So this is the end of the first class of managerial accounting. I know nothing too concrete, nothing too tangible yet, but soon we will be talking about real case example stuff of different topics. Okay. Thank you.